Hi folks, it's May 12th, 2020. Around about 4 p.m. the markets are closed. Let's begin by showing you something that I actually shared with you folks as well in the Excel. And I just read it out the daily cycle from the inverted picture. So if you go to the cycle side by side picture, we kind of knew that Monday through Wednesday is going to be chop, and then somewhere around post Tuesday close when futures open through 1 a.m., I think 1 or 2 a.m. overnight is a major CIT zone. And So what I want to show you is that so the first part kind of played out correctly from a cycles point of view. Of course, based on everything I was looking at, including the sum model, this kind of a drawdown was not expected, and it pretty much happened in the final hour, unfortunately. So, for short-term traders, probably this didn't really work out. Um, but let's look at the inverted cycle. And what inverted cycle is it's kind of my discovery that it's literally, if you imagine if the week was a circle, you can traverse the circle clockwise or anti-clockwise, and I don't know why this happens. uh, of course there's astro stuff that might be driving it, but literally the week plays out, let's just say, in a retrograde motion in reverse. So that's what an inversion is on a weekly basis. So it's as if hourly cycles are doing this, but the daily cycle is moving like this. This is like Sunday open, and then it's kind of moving like this. So here's the daily and hourly mix. But if I weed out the daily cycle, you can see pretty much the Monday or Sunday night highs kept holding, and we had good couple of attempts. That's what we were seeing from here, and then eventually a back down into post Tuesday close. And at this point, we can clearly see we're arriving at a bottom in the cycles. So, that's the cycles point of view I wanted to share with you. So just keep that in your head as we move into rest of the analysis recap. So hang on a sec, let me get my screen in order. So from a visual perspective, what is expected? One is once the futures open, we actually open higher in about 45 minutes and don't look back. And the second is we stay down into 1 a.m., but there is not much price atrophy, and we'll cover the numbers. So this one says we actually now shoot higher into 1 a.m. because there's an inversion, and then we get another retest, which is pretty much mandatory at this point because the models left on a sell, and we are seeing the after hour sell, and cycles are bottoming like I showed you just now in the previous couple of minutes. So this is after hours bar. So basically when the models leave on sell, you do get a very good entry, which is more like a confirmed entry between open through 10:10 a.m. EST. Always wise to wait for the 9:05 or Central. I live in Central, so 10:05 bar for the 5 minutes. And if it's coming in low, especially a quick movement, that's going to be a buy. Now, what I'm going to show you is in the insane category, just looking at cycles. And I know it's not been a pretty close, but if we start to see something like this where we actually gap higher and head higher into 1 a.m., it is possible that we actually clear these highs, intra-week highs, by tomorrow's close or maybe a little after. So that's one perspective. And the second perspective is we, do the little bit drawdown into 1 a.m., then start moving up, and we'll still see the retest at 10 a.m. And then the market actually printed a signal which is unmet. So this basically is a false decline, and it says that 21.5 S&P, that'll be 29, 16 on the ES, has to print in 3 trading days, and that's kind of a hard target that it needs to print, and I'll show you why. So that's what I'm expecting visually. Let's kind of move over to the unified model. In the unified model, we basically close back down into 0.382 once 2926.59 was gone. And so support comes in at 2838.72 through 2826.12. So we'll have to see as these levels are surpassed, we could continue moving higher. And obviously this is kind of the last line of support. And like I said, truly speaking, this was the low, and my expectation is, the 513 bar is very, very key, and the fact we declined into it actually does prove my theory that 513 is gonna actually invert higher, as against what most folks are thinking. Obviously, in the to be proven category, and the model, if the cycles and the models are not synergistic. And why I do all of these models and why I look at cycles is I like seeing synergy. So at today's close, the synergy was lost, but cycles can do their magic, and the after hours lows can actually satisfy the model's sell condition and at some point reverse it. In other cases, you fail big. So it is a critical juncture, and let's see what happens. So where is the 21.69 coming from? So the Mechans at various degrees consider them to be center of gravities or pivot points. The daily ones is literally the center of gravity for the day. When I posted on the chat that days on sell, that's where it was coming from. We had a sell, and that obviously pointed to if the 2 p.m. bar did not turn the market up, then we literally have a time stop at the 2 p.m. bar lows, or just a little bit thereafter. So now, why do I say it's unmet or will be printed? Because this, if you notice, was higher than the monthly pivot and the weekly pivot, which are ordered in a bullish fashion. So the week is bullish. If I read this model, which basically says the week can only stay down maximum into Wednesday. Okay, so you literally divide the when you get this kind of profile, you literally divide the week into time slot, and the midpoint is Wednesday. So that's the maximum the market can stay down into and reverse during bear cycles. So we can see that if you look at the close, the monthly looks on a sell, the weekly obviously is on a buy, and then the daily relative to the week is on a buy because of the center of gravity being higher than 2918.24. So the system already printed unmet target for future. So looking at the Elliott waves, everything busted at the smaller degree. So in the weekly is resting at 2843.4. So very, very critical juncture. We were kind of at Low is 2844.5 so far after hours, and below that actually it becomes a steeper fall because the next support is actually the intermediate degree wave. Hopefully this does not transpire, and obviously you can calculate the midpoint between the two. That'll be 13, roughly 58 points, 29, so roughly 28.14 on the S&P cash. So, and then we also remember that the monthly start to May was higher than this. So, and we're getting to the midpoint of May, which is 515. So, again, for the bullish action to transpire, I did mention that we might have to wait till mid-May for that to transpire. So that's the scoop, and I kind of already drew um, these alternates on the S&P chart. So that's what we're looking at. Take your pick. I mentioned there are three alternates. One is always to stay on the sidelines. Second is await tomorrow morning's open. Even if you catch it a little bit higher, at least you're getting a confirmation because you would have seen this kind of a move, either this or this or this, and that'll confirm it, and you basically grab it here. Because from here, I do expect a larger movement to the upside. If we fail, we'll know tomorrow. I think tomorrow is going to be a tell. And the second option is buying it here and using, I would say, the stops are pretty low. This is the closest possible bar, 2830.3. Then I would use this 2806.8, and I can't offer you any more other stops other than this. Um, this provides us to 3872 and 2612 as well. So that's the story, and let's see how it shakes out. Good luck and be safe.